Welcome to LJ Daily Housing Market Update. You should find this video useful or helpful if you're trying to purchase a house in 2024. So today is January 29, 24. So let's get started with the interest rates. The interest rates came down only 2 basis points national average from Friday. So they're hovering around 6.88 for your 30-year fixed conventional loans versus your 30-year FHA 6.17. Okay, this is your top tier scenario according to Mortgage News Daily. And then your Freddie Mac's national averages for 30-year fixed conventional loans were 6.69 versus your 15-year 5.96. Again, this is your top tier scenario. What does that mean? That means that this person has good credit scores above 780 or more. So the higher your credit scores, the lower your interest rate will be offered by your lenders. Your home location matters, which state or county that you live in. Your down payment also matters. The larger your down payment means the lower interest rates. Your home loan term also matters. If you're going with 15-year versus 30-year. Your loan type also matters. Your FHA loans, your conventional, those type. Also, your residency. Will you live there or will you rent that property out? That will make a difference. And how many units is it? Is it single family? Is it two family? That will make a difference as well. So just know there's many factors that goes into when it comes to your interest rates. Your buying power. Your buying power from 2023 to 2024, it should be increasing. Why? Because the interest rates are decreasing. When the interest rates go down, you qualify for a bit more. So you guys can look at this example here. If you were to get a loan for $550,000 at 6.88% versus your 7.63 that we seen on the higher end early a couple of months back, that person that qualifies for 550 with this mortgage of 3614 would have to get a mortgage for 510,000 with higher interest rate. So now you can rest assured that the interest rates are dropping, your affordability should be increasing. Okay? Your affordability, we're going to give you three different examples here for three different household families here. So the first one is making $85,000 annual income. They have a down payment of $60,000. Their monthly debt, this is their minimum payments that they do have to make on their credit cards or any monthly debt they have to make every month, is to $150. We're using 6.90 for the interest rate. Property taxes 5,000, property insurance 1,500. This family can purchase a house for $535,000. But wait, this is maxing out. This is maxing out their debt to income ratio for a FHA loan, which allows lenders to go up to 54%. But guess what? Maybe you don't want to do that. Maybe you don't want majority of your payment that you're making, the monthly income that you're making, you don't want 54% to go towards your mortgage. So you want lower, low as possible for this one. Okay. Second scenario we have is a household income of $115,000 with $75,000 down payment. They have no debt. They are prepared to buy a house. They cleared all their debt. Same, everything else remains the same as the first scenario. This family with FHA can go up to $778,000. But guess what? Their monthly payment is $5,175. According to them, that was too much for them. They don't want that, which is a good thing, right? You don't want that. You don't want to put so much money towards your mortgage and not have anything left for other expenses. So what this family did was to go with 40%, 45% debt to income ratio. So instead of their payments being 5,100, it is 4,300. But now their affordability, obviously, they can purchase up to seven something, but no, they're comfortable with at 647. They say, hey, I can find a perfectly fine property, single family with that, and I'm comfortable with this monthly mortgage payment. So just make sure not what you can max out. You don't want that. See where you're comfortable making those payments. Okay. Next couple of headlines here in the news for housing market: the interest rates or your mortgage rates in USA to drop to 5.5 in 2024. Survey says we wish that comes sooner than later, but just know that when these rates come down to 5.5, the prices, home prices will go up. According to CBS here, what will happen to home prices if mortgage rates fall? Simply put, they will be higher. Okay. Your inflation is at 3.3 right now, and we will get the January readings in a couple of weeks, and then hopefully it stayed at 3.35 or goes lower. Okay. When will these Feds actually start cutting rates? We expect them to do it on March 20th as the first cut. No guarantees. We're simply waiting on them and see when will these cuts actually happen. The home prices for last couple of years have been going up and up, but just don't think that hey they will come down if the interest rates come down. It's simply supply and demand, because there will be more buyers trying to purchase the same property as you are. The prices will not come down. Okay. How much will they go higher? We don't know, but don't expect them to come down. Next, guys, every day we want to give you a different loan program to look at. So this way, at least you know what programs are available out there. So one of the programs is called DSCR. This is debt service coverage ratio. It's a no income check. So if you don't want to show your income, or maybe you haven't filing your taxes, or whatever your case might be, or your taxes are too low, you simply don't qualify for the property that you want, then you want to look into DSCR loan, no income check loan. So let's look at the requirements. Number one is your credit scores. Your credit scores have to be superb in order to qualify for this. So if your credit scores are above 720, then you qualify. Your down payment minimum is needed 20%, okay, for this type of loan. The bank wants to know, hey, fine, you have not been paying your taxes, but we just want to make sure you have enough skin in the game when you're buying this property. Your debt to income ratio can be 49%. Your closing cost is between 5 and 7%. Just remember, when you're doing no income check, the closing cost will always be a little bit higher than your normal conventional loans. Okay. It's designed for new and experienced real estate investors who are just trying to purchase the property and qualify based on the cash flow that that property is making. So whatever the property you want to buy, you need to make sure whatever rent that you're getting from there is going to cover your mortgage. If, for example, if your rent is $3,000, you're collecting rent from the person that you're going to have them rent that property out. If they're paying $3,000 and you're paying, the mortgage payment is $3,000, then you can get that loan. Okay. So some key points here is a no income check, no tax returns needed. You just need to make sure your rental income is going to cover your monthly mortgage payment, but it's only for investment. If you plan to live there, this loan is not for you guys. So I always say this loan is not for first time home buyers, the we say it, right? Because if as a first time home buyer you want to live in that property, so you want to go either with FHA or conventional income check loans rather than going with DSCR, because it cannot be your primary residence. Okay. So if you want to put get one family, one unit, 20%. If you want more, a two family house, three family house, then you need 25%. This type of loan, they usually want you to have reserves. So at least 3 months of reserves in your bank account. Some of them will allow gift funds. Our lenders do allow gift funds for DSCR. Another negative thing about this loan is your prepayment penalty. 6 months of interest if you finance or refinance this mortgage within first 1 to 5 years. Okay, so there's a lot of positive and negative things about this loan. So you need to make sure to see if you actually qualify and if you want to go with that or not. Next, guys, we have new listings on the market here. The first one is in Kew Garden, in Queens, listed for 198. It's a small studio co-op, so just one bedroom studio, small. It might be great for someone who just want to start off right into home ownership. They want to rent that out after a couple of years if their board allows it, but they just want to get the ball rolling. On the other hand, we have a new listing in Queens Village listed for 699, 4 bedrooms, 2 bathrooms, 50 by 100 lot size. So huge lot size. So listed for 699. Next one is in Belrose, listed for 748, 888, and it's 3 bedrooms, 1 bathroom. Does not seem like it has a huge lot size, but you guys can call us and we can help you out with this one. The next one is in Whitestone, listed for 1.399, 5 beds, 2 baths. So if you're looking in Queens area, Long Island area, we have 70 agents that can really help you guys, guide you guys all the way. I'm the broker here, but I'm non-producing, so all my leads actually go to my agents and they help you guys out. Next, guys, every day we want to teach you a term to learn. Today, we want to go with appraised value. What is the appraised value? It's the opinion of a value reached by appraisal based on comps, right? They're doing real comps. They're searching and making sure that this property, the property value that you're putting in, let's say you're buying a property for $500,000, you want the appraised value to be that $500,000 or more. If it's more, that means you're getting a good deal. So make sure you don't waive your bank appraisal contingency at the contract. So this appraised value will play a big, big role when you are under contract. Okay. You want to make sure whatever price you're putting in, the appraised value is higher, or at least what you're putting in. Okay. Next, guys, is your forecasted appreciation. This is from Queens County here. You guys, the point of this slide is to show you guys that even looking at 5 years, 10 years, or up to 63 years here, that the home prices have gone up over the years, right? It's not like it's going up way, way too up, but last couple of years it has been. But if you look at 60-year time frame, you can look at, hey, an average of 4% or more. So similar things in Nassau County as well. Next, guys, we want to pick one person that's really important in your transaction, and we will go with today as your title company. Right, number 7. This title company is hired by your attorney. If you're the buyer, your buyer's attorney will hire this title company, and they will check that particular property with chain of ownerships. Hey, you're buying from Mr. Smith. Who did Mr. Smith bought this property from? And going back and back and back up to like 60 some years. And they want to check any liens, if there's any violations, any open permits. Your title company is really on checking on the back end. Everything has to do with that property. So this way, no one comes to your house later on after the closing and say, "Hey, this is my house, and my father left this house to me or whatnot." Right? There will be no title issues. You want to make sure you get clear title before you close. You want to hear the word, hey, from your buyer's attorney, hey, we received the title report and we have a clear title. Okay, but if there are issues, you want to resolve them before closing. Guys, if you guys are trying to purchase in 2024, a property in 2024, make sure you have, you're focused on your income. You want to grow that much as possible. Your savings, grow that much as possible. Reduce your debt much as possible. Your credit scores, increase them much as possible. Okay, so for your down payment, your savings, make sure you have your down payment and your closing cost put together. And your credit scores, you want to have at least 580. If you have 580 already, you want to focus on getting them to 620 or above. And remember, if you're adding a spouse or another family member to the loan, their credit scores matters much as yours. So we hear that all the time. Hey, my wife has great credit scores, but not me. We both want to be on the mortgage. Then we have a problem. We need to make sure that both of their credit scores are solid and meet the guidelines. And if one of the loan officer in your area is telling you, hey, I can offer you 5% interest rates or 4% or 3%, whatever the interest rate is, you want to ask them, hey, how are you offering that when your national average is around 6.8 or 6.9? How are you offering that? Are you telling me that this is a buy down? If it is a buy down, see if it makes sense. If it's going to cost you, in this example, $82, if it's going to save you $82 per month, and it's going to cost you $4,000 to buy down that interest rate, it's going to take you 4 years to get that money back. right? So maybe it does make sense, maybe it doesn't make sense. You want to decide that and just make sure whatever interest rate that they're giving you, is it buying down or not? Okay, guys, we have 16 loan officers here that can answer any FHA, conventional, any loan program, questions for you. Even if you're under contract, just need a second opinion on anything, just give us a call or text us, and we can help you out. If you're a real estate agent watching this, guys, check out LJ Realty team. No office fees, no desk fees, providing all the tools that you guys need to complete a transaction. You get all the support that you need. So reach out to us if you need any help with the real estate. And I just want to say thank you so much for joining. I will see you guys tomorrow with the latest interest rates and what's on the market. You guys take care.